In this video, we are going to study meaning of macroeconomics, objectives of macroeconomics, macroeconomics issues in business, and the circular flow of goods and income. Let us begin with the meaning of macroeconomics. It is a branch of economics that studies the overall functioning and performance of an economy. It looks at the bigger picture, focusing on aggregate indicators like GDP, unemployment rate, inflation, and the national income. Unlike microeconomics, which deals with individual market and consumer, macroeconomics examines the economy as a whole. Objectives of macroeconomics. Number one, economic growth. It ensures the economy grow over time, increasing the production of goods and services, leading to higher living standards. Example, in India, we have a policies aimed at improving infrastructure like highways and railway, which help boost economic growth. Number two, full employment. Achieving a situation where everyone who wants a job can find one. This means reducing unemployment as much as possible. Example to consider here, the Mahatma Gandhi National Rural Employment in India provide guaranteed employment to rural household. Number three, price stability. Keeping inflation under control so that the purchasing power of money remains stable. Example here, the RBI adjusts interest rate to control inflation and keep prices stable. Number four, balance of payment stability. Ensuring that a country import and export are balanced over time, so it does not run into too much debt with other countries. Example to consider here, India strives to export more software and goods to balance its import of oil. Number 5. Social welfare. Promoting equitable distribution of wealth so all sections of society benefit from economic growth. Example to consider here, government schemes like public distribution system ensure that basic necessities like food grains are affordable for the poor. Issues in business related to macroeconomics. Business are affected by macroeconomic factors in several ways. Number 1, inflation. When inflation rises, the cost of raw material and wages goes up, which can reduce the profit margin for business. Example, if inflation in India increases, a company like Maruti Suzuki may have to raise car prices, which could reduce sales. Number 2, unemployment. High unemployment means less disposable income for people to spend, which can lead to lower sales for business. Example, if unemployment rate in India increases, consumer goods companies like Hindustan Unilever might see a drop in demand. Number 3, interest rate. Higher interest rate increases the cost of borrowing for business, which can reduce investment in project. Example, if the RBI increases interest rate, Indian companies might delay expanding their operation due to higher loan cost. Number 4, exchange rate. Fluctuation in the value of Indian rupee can affect business that import goods or export products. Example, if the rupee weakens against the US dollar, Indian IT companies like Infosys might earn more in rupee from their export, but companies importing technology might face higher cost. Number 5, government policies. Changes in government policies like tax rate or regulation can significantly impact the business operation. Example, the implementation of the GST in India affected how business manage their finances and pricing. Circular flow of goods and income. The circular flow of goods and income is an economic model that shows how money and goods move through the economy. It helps us understand the interaction between the different parts of the economy like household, business, the government and foreign market. Let us understand how it works. It moves from household to business. Household supply factors of production like labor, land, capital to business. Example to consider here, people work in factories, farm, offices, etc. Business to household. In return, Business pay wages, rent, interest and profit to household. Example, a factory pay its worker salaries. Number 3, household to business. With the income they earn, household buy goods and services from business. So, people, that is household, might spend their salary on groceries, clothes or a smartphone. 4, business to household. The money business earn from selling goods and services, it used to pay for more resources, creating a continuous flow of money and goods. Adding the government and foreign sector to this. Government, it collects taxes from household and business which it uses to provide public services like school, roads and healthcare. The government also spends money on buying goods and services and it can influence the economy through policies. Foreign sector, in an open economy, goods and services are traded with other countries. India exports goods like software services, textile and agricultural product and imports goods like oil, machinery and electronic. This adds another layer to the circular flow. Example, imagine an Indian family where one member works at Tata Motors. The family household provide a labor and a Tata Motor business pays a salary. The family uses this salary to buy goods like a car from Tata Motors, groceries from local store or a phone made by Samsung. This continuous loop of earning and spending keeps the economy moving, illustrating the circular flow of goods and income.